all you see right now is headlines about how we're heading to a recession, and it just feels like they've been saying that for the last year.
They haven't. This most predicted recession, and we've had two in the last 2 years. We've had two recessions.
Yeah.
And they don't even acknowledge that those happened.
Right. Yeah.
You know, and so you have them saying there's going to be one in the future when the Fed has 75 more basis points, and then they're pretty much over.
Yeah.
So. Yeah, I think there's lots of opportunities out there. I think there's tremendous opportunity. Hello, I'm Christian DeHaemer, and this is Angel Investment Research Podcast, and I'm here with the great Alex Koyfman, who is the editor of Small Cap Insider and First Call.
Microcap Insider.
Microcap Insider.
It's fine because small would be bigger than micro, so that was a compliment.
Oh, it's great. So, tell us a little about yourself and what you're doing.
Okay, well, I run the two services. They focus on, as the name implies, microcaps, or for lack of a better term, penny stocks. And typically I like to look at tech stocks, energy stocks, a little bit of resource, a little bit of biotech. It's a pretty good mixture. We've had a lot of success, specifically with anything pertaining to the EV revolution. So we're looking at batteries, next generation electric motors, that kind of thing. First Call is a little bit more specialized. It's for higher net worth investors who are interested in private offerings, pre-IPO investments, that kind of thing. And as far as subject matter, also more of the same. A lot of EV stuff, some biotech, resource, oil and gas, whatever's convenient and whatever makes sense. So That's what we do.
You're a big you're bullish on the EV story?
There's no real easy way to answer that question. There are definitely a lot of compelling arguments for why it's either overbought, overhyped, or just plain unsustainable, to do the things that some of our leaders and corporate leaders...
Right. Net zero by 2050.
Yeah, I mean, a lot of people talk about the environmental cost of mining lithium and how much mining it takes to keep every Tesla on the road, for example, and the damage that does to the environment in and of itself may, overshadow global warming, whatever the effects of more carbon in the air. Plus, in this country, where does 70% of our electricity come from? The stuff that you charge your batteries with. It's
right.
still
coal.
Yeah, it's
oil,
still fossil fuel. So,
hydrocarbons.
But that said, I don't see us driving internal combustion engine cars 50 years from now. Right. So that has to come at some point. I think that the proverbial Model T of the EV world is already here,
Right.
And I think that Tesla did that.
Right.
And if you look at what happened after Ford released the Model T, it pretty much destroyed all the existing competition, but it opened the door for a bunch of new companies to either get started or to rise to the top. And some of those companies are still around today, like Cadillac and Chevy. So
right. Dodge Brothers.
Yeah. So I think that now the question that I think you want to get to is it a good investment now? I mean, we've seen a serious bloodletting in the EV industry. We've seen Tesla lose like 75% of its market cap. We've seen Lucid and Rivian, kind of the two upstarts that a lot of people talk about. We've seen them do the same. I mean, Rivian, I think, was like $100 billion IPO, and what's it worth today? Like, I don't even think it's like in the 20s maybe.
Well, yeah, obviously it was a place for all this excess cash that the Fed printed to go to, like cryptocurrency or whatever. But interesting, I was at a copper mine. I was talking to these copper guys in Nevada like about 2 weeks ago, and they had all these slides talking about how much copper is going to be needed, to build all these EVs. And then, they're very bullish about the whole thing. So I think you're on the right track there with the, the resources necessary for these EV developments. And maybe that's where, the investor should be.
So what are you doing to address that?
What am I doing to address?
Yeah.
Well, I'm going to visit copper mines and, talking about it and looking into it. And so, like, as copper bottom, copper's been moving up for the past, month or so, and it's looking to break out. And, copper's always a precursor to bull markets. They call it Dr. Copper because it tells you what's going on in the markets.
Right.
So it's needed for electricity, it's needed for buildings, it's needed for global,
It's like it's a bellwether for everything, pretty much.
That's right. And so the idea is that China's reopening. Well, you have a number of trends, right? One is China's reopening. Another one is China, companies that used to manufacture in China because of the supply chain are moving to Mexico and the U.S., and so they're building factories and things like that. And, and then you have the EV idea that I think you need 90 pounds of copper per electric vehicle as opposed to, 5 pounds or whatever.
Yeah, and just the motor alone.
Yeah.
So, that makes sense. So, I guess you think that we've hit rock bottom already and we're on the way up?
I'm looking at the charts and you'll see, I'll give you a chart. If you see the NASDAQ, we're bounced off the bottom. I think we put in a bottom October 12th, and I think we're bouncing off that, and I think we'll retest it. So I don't think right now is the absolute bottom, but I think we'll go back there and then we'll bounce.
Okay, well, that should be a signal for the smart investors to start buying again, though, right?
Yeah, pretty soon here. I think you'll get another couple of weeks, and then about a month maybe we'll start buying again. We'll start looking. I don't think it'll be tech stocks you want to own. I think it'll be more resource stocks, commodities, things like that. Whatever China is going to suck up once they reopen.
Gotcha.
And what are your thoughts on the market, and what are you bullish on? What trends do you see?
What trends do I see? When I first came to Angel Publishing, this company was built out as like the contrarian investment research, investment wisdom, and it's funny because a lot of the people that we work with are still convinced that we're not just haven't hit bottom yet. We have a long way to go, and that's kind of in line with popular wisdom right now.
Right.
So that's not contrarian at all.
Everybody's calling we're heading for a massive recession.
All those people are always wrong, though. Yeah. That's the thing. They were
wrong 2010.
They'll make movies about how wrong they were 10 years from now.
Absolutely.
And so I kind of go by that. My investment strategy is to always be, if not the dumbest, then one of the dumbest people in the room. Surround myself with people who are smarter than me and look at what they're doing and do some of the things that they're doing. And so I see that fear is probably peaking right now. And when I see that, that's definitely a huge green light for me to start buying stuff. And that's what I have been doing probably for the last 6 months. I tend to buy private companies more than public companies. And so I take those opportunities. To me, it's almost a shelter against recession because these companies are going to stay private and illiquid, and therefore impossible to for the stock price to collapse for the next year and a half, and then hopefully year and a half from now we're actually in a bull market, and and at that point they become liquid, and I can come out with a nice tidy profit. So that's my thinking generally. I look at the people that I think are going to be wrong.
Right.
And the talking heads right now, all you see right now is headlines about how we're heading to a recession. And, it just feels like they've been saying that for the last year.
They haven't. This most predicted recession. And we've had two in the last 2 years. We've had two recessions.
Yeah.
And they don't even acknowledge that those happened.
Right, yeah.
You know? And so you have them saying there's going to be one in the future when the Fed has 75 more basis points, and then, they're pretty much over.
Yeah.
So, yeah, I think there's lots of opportunities out there. I think there's tremendous opportunities. But you're talking about private companies. How would somebody actually, Joe Blow, go out and buy a private company?
Well, we do offer some opportunity to get exposed to that through First Call.
Yeah.
So if people want, they can always sign up. Right now, deal flow, just so people know, deal flow right now is still pretty thin. Mm-hmm. A lot of these private offerings, people are just waiting. They're waiting for when the stock market starts to pick up because they know that they can exit it at a higher price. So,
what do you mean by deal flow?
Deal flow meaning companies aren't private companies or public companies that are doing private fundraising. they're just not as active right now as they would have been, say, a year and a half ago when it was red hot. When
They're just waiting,
yeah, they're waiting a little bit,
building their business. Whatever.
But again, if you have the courage to get in now, it's the same deal. You know, you're getting in at lower valuation. They want to avoid lower valuation because they want the next raise to be at a higher price, ultimately, so that they can IPO at a higher price.
Oh,
but right now, if it's cheap, then guys like me, we want a piece of that. The problem is there are less apples floating around for you to bite off of. So, it's tough, but I think I would tend to agree with you. I think it's going to get better, and hopefully by the end of the year, things will be picking up a little bit. So, more or less, that's what we're looking at. What about, besides China, what other global catalysts are you looking at?
I mean, you gotta think what's priced in, right? First of all, like you said about contrarianism, you have to think. Oftentimes, I'll do the mental gymnastics of go, what's the most hated thing right now, right? And so, if you're looking around the world and you'd say, what's the most hated thing?
Russia and China.
Yeah, Gazprom probably, but you can't buy it. But if you could, it'd probably be a bargain. So at some point, probably after the spring offensive, the Ukraine and the Russia will come to some sort of negotiation and they'll have some sort of peace.
Do you honestly think that that's going to end in something like that? It's going to be a negotiation?
No. You think it'll just go forever? I don't know. I mean, my play on the Russian thing has been oil tankers, and I've been bullish on oil tankers for 2 years now.
For storage?
No.
Or for actual transportation?
Yeah, because they blew up Nord Stream, and because the Russian oil is now going from Russia to India, and Russia, instead of through pipelines to Germany, it's now going through, put on ships and sent to India or China, and then refined and sold back to Europe.
Well, who's going to be building the oil tank, or how is that going to work with the sanctions? Right?
Oh, because a lot of the oil tankers are owned by the Greeks, and the Greeks don't care about the sanctions, and they're selling their 20-year-old oil tankers at a premium to anonymous buyers who are just
who are the Russians,
which are the Russians,
but they need
Chinese.
they need to replace their merchandise. And so.
Right, but they can't because this is a great story because during the pandemic, first of all, China and South Korea, who build all these ships, were offline. A lot of it was slowed down, and because the container ships were in high demand, they ordered 3 years worth of container ships. And it takes 3 years to make an oil tanker. Mm-hmm. And so we're at a 15 to 20 year cyclical low in oil tankers. The actual number of them, the fleet size is
3 years.
Low. Huh?
That's wild. 3 years to build a ship like that.
Yeah.
We used to build them in a month during World War II.
Like Liberty ships.
Yeah.
3 days and all that. Yeah. But these are, massive ships and all that, and they have 2 hulls and, get insurance and whatever. But so they're not going to have new oil tankers until 2025 is my point. And so those people that right now have oil tankers, they're selling their junk oil tankers that used to be scrapped to the anonymous buyers at a premium. So their net asset value is going up. They're charging leases are hitting records because their time, their miles they're sailing is much longer, and so their time's much longer. And anyway, so I'm bullish on oil tankers. It's one of my big themes of this year.
Gotcha. Okay. I know you didn't really want to talk about this, but crypto. Bitcoin's 17,000. It's holding up remarkably well. How much should it be, though?
I guess it should be 17,000.
See, that's the big question. I've never, we've been on the crypto story. Jesus, I don't even remember the first time I remember the first time I wrote about it, and I was nowhere near the first at Angel. It was 2017.
I recommended it at $490.
What was that?
2015, 16, something like that. Yeah, and I wrote it and I sold it all in that first run when it went to 19. And then it went up to, 6. It came back to 7, went to 69, 69.
I'm trying to figure out a justification for any valuation on that.
Any valuation on Bitcoin?
How do you, if you were to, I don't know if you do on your own buy this stuff. I've dabbled in it and I've always regretted it.
Oh, yeah.
Yeah, how do you do it?
Well, like you said, people spend $100,000 on license plates in Delaware.
Yeah, but you kind of, those $100,000 license plates, those people know what they're getting. They know who they're competing with.
Right.
The product makes sense to them. They can hold it in their hand. They can,
Right.
they can have people looking at them, which
Right.
that's the value. What is the utility of a Bitcoin other than the fact that it can contain money?
Well, I first recommended Bitcoin because it had all the earmarks of a stupendous bubble.
Okay.
Because nobody understands it, first of all, and then there were diehards who would talk about it and pretend to understand it, and then there was a ton of money being thrown at it, and so it was a new thing. So it was like it reminded me of the tech bubble of 1997.
Sure.
The internet. When Yahoo got bid up to 1,000 p and all that stuff, and Yahoo Japan went even higher, and it had the same thing because there was limited supply, right? So if you have limited supply, a whole lot of attention, and no real understanding, it's like, it's just a massive bubble waiting to happen. Yeah.
I like that explanation.
Yeah.
You think the FTX debacle is gonna kind of put a reset on the whole market, or it's not gonna really?
Well, I think I thought Bitcoin would go back to like 7,000, and the fact that it's holding at 17,000, and there's again a limited supply, and I don't know. I think you have the problem with Bitcoin, of course, is you have a lot of whales in there who aren't selling, and so they're holding, and so it's holding the line. But I wouldn't mess with it. I mean, I prefer other things like pot stocks or whatever, which are down like 98%.
Sure, and that market's probably only going to be going up.
You got to think there's going to be merging. Yeah, if you get legalized banking in the pot industry, it's going to double. Overnight, and that's bound to happen in the next 2 years.
Sure.
So is it worth waiting 50% a year? Of course it is. Of course, like Tilray, I think, was talking about converting some of their greenhouses to like growing lettuce because there's more margins on lettuce right now.
Wow, man, gotta start raising those prices.
Yeah.
So why don't I talked about my newsletters. Tell us about yours.
I write the Bull and Bust Report, and I write Launchpad Trader. And the Bull and Bust Report is we do like some deep value stuff, or value and growth, I guess. Growth at a fair price is what we're talking about. Which is why I've been buying Mexican airports. There's limited things to buy in Mexico. There's like 10 stocks you can buy in the New York Stock Exchange. And my thesis is that Mexico will be the country of the next decade because they signed the new NAFTA agreement. And, Biden was just down there. And they have a population pyramid, which is really beneficial to historic stock market gains. Everybody's 25. They have something like 5 of the top 50 universities in the world. And anyway, their economic minister just said 400 companies were asking about permits to build factories or expand factories. So you have people leaving China and going to Mexico. And there's limited ways to play it. And one of the ways to play it is to buy these Mexican airports, which are like a utility. They make money as passengers come through, and they also rent out, restaurant spaces and all that. And they pay one of them pays like a 13% dividend. And they've had if you look over the last 10 years, including COVID years, when there was no traffic, they paid like a 17%. They've had a 17% annual growth rate. Just phenomenal, safe.
Resource-wise, precious metals. What do you talked about copper a little bit?
Copper. I like silver. I own a couple of silver plays. In Launchpad Trailer, we do momentum trades. So what people are buying, and so we get in and out in about 3 months. We cashed out a lot of our oil plays recently, which have done really well last year. And now I'm moving into some silver plays. Vino Silver, if you know that, ASM, 70-cent stock. It for some reason it launches more than.
What's the market cap?
Like 120 million.
So
Small, tiny.
Microcap.
Yeah.
Where's it based?
They have their mines in Mexico, and they're based out of Canada, I think. Yeah.
Gotcha. Okay.
How about yourself?
Resource-wise, I've been steering clear of it as far as the newsletters recently, but I've been personally doing some dabbling in oil and gas, and that's mostly because that's what's been available lately. That's kind of the one sector that I've seen in the Canadian market, at least, that their offerings just haven't really slowed down. They just continued, even through all the panic of the second half of the last year. It's been pretty consistent.
Oil was the best performing sector last year, and Exxon, the biggest oil company in the world, still has a PE of 9. So they're still undervalued, in my opinion, anyway.
Yep. So I mean that's it in a nutshell. My only sort of like ongoing speculative, pattern, personal trend type thing to look at is, I would say, graphene right now. For the next 5 to 10 years, graphene. We've talked about it a lot on these podcasts, but for those who have never heard of it, it's what's called a nanostructure. So it's an artificial material that's 1 atom thick. It was discovered at the beginning of the century. It won its key researchers the Nobel Prize in 2012. And this stuff it's a wonder material. That's what they call it. And 200 times as strong as steel. An acre of it weighs less than a gram. They can potentially replace silicon with it. And, they can start making the next generation of microchips out of it, which addresses another issue, and that's the global chip shortage. And so, graphene, there have been a couple of key breakthroughs over the course of the last couple of years that have radically decreased the production price. So it went from being basically twice as expensive as gold to make. We're talking something like $3,000 an ounce, probably to 1/100th that. And so with that, a whole slew of new opportunities opens. There's next-gen batteries. There's next-gen computer chips. There's all sorts of industrial materials that can be made of it. Everything right down to body armor to stop bullets in war. So we're going to be looking at that a lot this year.
So are you buying the producers, or are you buying the people who use it? Or
no, producers right now. There are a couple of small companies, relatively small companies.
How do you get a graphene? Do you grow it?
So there's a production method, and I don't know the ins and outs of it, but all it requires is natural gas and electricity, and they can make this stuff to exacting specifications. So whatever you want to do with it, you can do with it. Conductors, semiconductors. It's the best thermal conductor known to man. It's going
to replace copper then.
It may. The problem is
expensive.
It's expensive, but I think that the benefits in the long term, it'll be like an order of magnitude improvement in performance of personal electronics, batteries. You can charge your phone in just maybe 10 to 20 seconds. You could charge an electric vehicle in less than a minute. So
is that right?
That's quicker. That's quicker than you can pump a tank full of gas. This is all stuff that it's not on the shelves yet, obviously, but the next couple of years we will see it. The first graphene batteries right now are the consumer level production is just starting right now. So we're going to be looking into that at Microcap Insider over the course of this year. It should be interesting.
All right, sounds great.
Yep. So probably a good point we've reached to say goodbye.
Great
Chris,
having
always
you
a
on.
pleasure, man.
Yep, we'll catch you next time.
Yep.
Angel Investment Research.